By way of background, just so you have a little bit more knowledge about me, I used to process loans as well as underwrite loans, and I own my own branch at one time in space, as well as uh, teach constantly practical financial management, because people make a lot of money and unfortunately don't have a lot to show for it. So I bring a full package to you and your customers when we are going through the transaction as the need can arise. So, with that being said, I've been with Fidelity going on 9 years now. Fidelity is based out of Gaithersburg, and we recently merged with a company in New Jersey called Absolute Home Mortgage, which is fitting because we absolutely are the best opportunity available for you and your customers. So, with that being said, let's see. I've been in the Maryland area more than 30 years. And yeah, I believe in getting the job done. Thus, my name, Fredisha Money, on social media, because an investment in real estate, as you already know, is typically your customer's largest venture. And you need to know that when you place your customer, your contract in the hands of a lender, you're placing your commission in their hands as well. And we do not take that lightly. So thank you for each and every opportunity. With that, we'll go with the PowerPoint so I can stay on point. Alicia, let's do it. Okay, so today our topic is real estate money today. Because believe it or not, the industry, well, not believe it or not, the industry does change. And over the decades that I've been in the industry, I've seen about everything under the sun. I started when there was no such thing as the internet, everything was hand carried. You did not have the opportunity to fax anything. We were so excited when the fax machine came along. Yep, I'm still a young woman and I wear my stilettos. Jasmine will tell you, I still wear the high heel sneakers, okay? So don't get it twisted. Um, so, real estate money today has to be relevant to what you're doing. We offer a wide variety of products because the money is different. We have people that are going to live in the home as their primary residence. We have people that are looking for a second vacation home. We have people that are looking for investment property and commercial properties. We bring the entire menu to the table today. Next slide. We have the money that you need, as I mentioned. My other name is the Journal of Finance. Um, and we know that we have the experience of what it takes to close your loans, get you paid, and create raving fans that will grow your business. Yes, we know how to market, but we don't want to constantly beat the bushes for business. We all want to get to the point where we have business flowing in as a referral and we can have our CRM streaming in the background, but no longer just relying on that. Next slide. You're probably already aware, but I thought I would bring it back to your attention that FHA has much higher loan limits now. Can you imagine buying a 3 unit building costing approximately, or having a loan with 1,200,000 and only needing a 3.5% down payment? Now, conventional, the down payment is much higher for your multi units, but FHA will allow you to still use only 3.5% and buy that multi unit. Okay, just a reminder. Next slide. The DSCR, not everybody, but a lot of people now want to be an investor. They want to build their real estate portfolio, but they don't want to supply tax returns. They don't want to give us income documents. Great. I don't want to see all that stuff. We want the property to carry the mortgage. What do I mean by that? As long as the rental income that's expected to come in on the property exceeds the mortgage payment by $1, I don't want the investors' tax returns. I don't want their income statements, but I do want to see that they have the money necessary and the credit to carry the loan. Okay? Called DSCR. It's helping a lot of people buy a property without all the documentation normally required. Next slide. And that also is available with scores as little as 640. Okay, what would you say is the biggest challenge most people have today in buying a house aside from credit? Chat it up in the chat, wherever that is. Meanwhile, I'll tell you the answer: cash to close. We recognize that. And as such, we have an FHA loan with 100% financing. Notice financing 100%. They're still going to need money for closing, but if we can remove the need for the down payment and do 100% financing, that really gives people a leg up in the buying process. And guess what? People that don't have money know other people that don't have money, which means a referral for you. Okay. So 640 minimum credit score, two loans, first and a second trust, zero down payment. Seller, if he's willing and able, can pay closing on their behalf. So it cuts the amount of cash needed to get in. That loan today with a 680 score is pricing about 6.8750 points. Now, you already know whenever the lender or anybody starts paying something on the behalf of your customer, there's always a string attached. And in this scenario, it translates into the interest rate being a little bit higher. But hey, zero money down, eliminating a lot of the cash to close issue. It's a win win for everybody involved. Next slide. Okay, I don't have to go into a lot of detail with Maryland Mortgage Program, just to let you know we have it available. Next slide. And hopefully, but wait, before you change from that one, Alicia, hopefully the Maryland Mortgage Program rep told you that you don't have to be a first time buyer in all of their programs. They do have a program that allows you to have owned property in the last 3 years. You're not buying in a targeted area, and you can still get Maryland Mortgage Program and some assistance. Okay? Next slide. Federal Home Loan Bank Grant. This is a true grant. It is not something that's paid back. The money comes and it goes. Right now, we found out last night a portion of it had run out, but there's still money available under the Federal Home Loan Bank program. And the thing is, you want to get people, your customers, talking. You want to talk to them about down payment assistance. You don't necessarily want to lead with that conversation, but knowing that it is available once you know more about your customer, again, it can get you the next referral, which is what everybody wants. Also, under the Federal Home Loan Bank Grant program, you don't have to always be a first time buyer. And in a certain portion of it, you can still own other real estate. They also have a renovation piece for properties that have experienced disaster. Okay, next slide. Something to keep in mind. Prince George's County recently opened its Pathway to Purchase program. Very powerful tool. I have closed several loans under it. But what I need you to keep in mind, they have very strict guidelines, and typically they are not flexible. But knowing the requirement going in allows you to still win for your customer. Jasmine, did you say someone came in from the county to talk to you all about this?
Yes, so we had the pathway to purchase as
Okay.
well as the Maryland mortgage program, but you can reiterate the most important components.
Up to $25,000 in assistance. And of course, the property must be in Prince George's County, owner occupied only. None of those, what do you call? None of those extenuating items that I talked about a few minutes ago. Next slide. You must have home buyer education. You must use a participating lender, of which I am one. Otherwise, I would not be talking about it. And 10-year forgiveness allows people to build more equity. They hold on to it for 10 years, um, the loan is forgiven. Okay. Next slide and the next one. Okay. Other programs, before I go into this, I want to mention one other strategic program. I don't want to take it for granted that I have regular FHA, regular VA, and regular conventional. Okay. That's standard bread and butter financing. In addition to that, however, again, life events happen, bankruptcies happen, foreclosures happen. Um, Part time workers still want to buy a house. GIG, that's your self employed entrepreneur that doesn't work for any single employer, but can constantly show that they're working because of deposits going into their bank account. Your ITN borrower, um, people that don't have a green card, they have a EAD, they have a work card, EAD card. Um, People that experienced a short sale. These people still want to buy a house. We have a solution for it. Some people like to call it rent to own. We don't. We call it a land installment contract under FHA, which allows you to circumvent the wait time. For example, a bankruptcy FHA, typically you got to wait 2 years before you can get regular financing. We circumvent that with this program that I'm about to tell you about. Um, it's called the FHA Land Installment, and let me give you the special name that we came up with it. Um, Buy now, not later. And again, it looks like a rental program, but you're not renting. Your buyer is not renting. They're making a 3.5% down payment. They are buying the house from day one with a shared equity partner, which is the servicer to whom they make their payments. Now, get this, they're building equity from day one. But let's say they decide down the road they don't want the house anymore. They don't want to sell the house. They can just sign it over to the servicer, walk away from all their equity that they have earned, as well as the down payment that they put in. Now, who would do that? Nobody in their right mind, not really. They would just sell the property, pay the servicer their portion, which is the shared equity, keep the rest of the equity, and keep it moving. It's an excellent program for a person that's one day out of bankruptcy, one day out of short sale, one day out of foreclosure, and those other people people that work part-time. Normally, in order to do a loan for a person who works part-time only, they have to be working 2 years or more part-time. This circumvents that. The person that gets paid hourly normally must show a 2 year history. This circumvents that. The person that's a singer in a nightclub, or they're a jazz musician on the weekend, or they drive for Uber, or they drive for whomever, whatever. They do DoorDash. If they can show me consistent deposits for 6 months to support a mortgage, this is the program. Okay, Fredetia Money, that sounds great. What's the string? They're going to pay more for it in the interest rate. There's a program fee, but if they cannot wait the normal time to get to regular interest rates, we have a solution for them. We like to think that we are all things to all people. Okay? So that's our one day out of bankruptcy, one day out of short sale foreclosure, specialty product, FHA financing, 3.5% down payment. Okay? Hit me up about it later if you'd like more details. Now, value added. Those are programs. So we're going to stay there a minute, Alicia. I've talked to you about program offerings at Fidelity. Let's talk about other things that can help you make money in real estate and put you ahead of the game versus behind the eight ball. Let's talk about moving the money, closing the deal, closing the transaction. Oftentimes, you see properties, and you yourself, as a listing agent, maybe get ready to reduce the price because the property is not moving. Instead of reducing the price, let's talk about move the money, close the deal. Next slide. Targeted selling. You're not getting the traffic you expect, so the first reaction, lower the listing price. That might increase traffic, but it still limits the potential buyer because we talked about cash to close, in addition to credit, sometimes is the biggest challenge most people have. Would you agree with me? Give me a thumbs up, give me a nod on the head. For those of you that are on camera, put it in the chat. Let me know I'm not putting you to sleep. Okay. So thank you, thank you, thank you. Let's talk about, instead of lowering the list price, let's move the money, maintain the same list price, which does what? It keeps your values in the community up. Okay. Prince George's County, beautiful homes, but we have lower sales price than a lot of our communities, counties around us. I was in a development the other day, okay, 1253, because I can go on some rabbit trails. I was in a community the other day, and oh my goodness, beautiful homes. I really didn't know they were back there. Those homes in Montgomery County, easily 5, 6 million and more. Not over here in Prince George's County. So we got to keep our values up as much as possible. Thus, instead of lowering the price, next slide, let's talk about how we can take that $10,000 or $20,000 price reduction and offer it for closing help, either straight closing or let's pay for a buy down to help the person get a lower payment. I didn't say qualify them at the lower rate. I said get a lower payment and help them buy that listing at that $500,000 sale price instead of dropping the price. Move the money, close the deal. Next slide. Targeted buying. As the market has begun to normalize, I mean, many of you were in the industry when there was a feeding frenzy. 10 and 15 contracts on one house. Oh my goodness. Buyers putting in 3 and 4 offers just to try to get something. We're not there anymore. Whew, everybody take a deep breath, exhale. But there's nothing to say it won't go back to that. But right now, the market has started to normalize. We're starting to see list price reductions in all markets, even the super hot ones. Not every listing, but we do not need every listing. We just need to move the listings that we have or get the listing sold under contract that our buyer is interested in. So again, when you see these price reductions and you're thinking about your buyers that need cash to close, let's think about if they can qualify in that price range that the house was initially listed. Let's think about making an offer there and asking for the closing instead of dropping the price. Next slide. So I basically told you how it works, but here it is in print. So if a price reduction of 25,000 was planned on the 450, don't. Instead, move the money, use it for, say, a buy down or other closing costs. FHA, your max is 6% plus the split. Conventional with 5% is 3% plus the split. Or if it's 10% down, they can do 6%. But if they make a 3% down payment, it's still just 3%. Okay. Next slide. Oh, not that slide. Go back to the other one. So that's basically how it works. So that value added proposition is what I want to make sure I brought out to the Porterhouse International Group today. Not that you didn't already know about it, but it's always good to have a refresher. We are making loans with the 2-1 buy down or the 1-0 buy down. And a buy down basically is if the interest rate in the long run is going to be 6.5, their first year rate could be 5.5 or even 4.5 if we do a 2-1 buy down. So a buy down is a stair step loan that allows a person to gradually move into their affordable mortgage, but with a lower start rate. Am I having getting any questions in the chat, Alicia, on anything that we've said thus far? Nope. Okay. All right. So good. That's basically it. When I issue a pre-approval, we have run it through DU and LP. As you know, that's desktop underwriting and loan prospector, which means my underwriter, once I have approved eligible, my underwriter does not add conditions over and above the stated conditions from that automated approval. Okay. We also have the capability of pulling documents directly from the customer's employer and bank account if they allow us. I'm not so sure I would like to do that, especially the bank account, but it's totally safe. But I'm kind of old school a little bit on certain things, but we have the capability to do that. In a recent transaction with your broker, Jasmine, we were able to do a cutting edge technique of getting a final inspection done without waiting for the appraiser who was so busy. But she was able to go out to the property, which the geo tracker identified her as being in the property, take a picture of the repair, send it in, bam, final inspection done. Again, we are doing what's necessary to move to the next level to keep the process moving, not slow the process down. Okay, now I will stop talking and go to the next slide and allow questions if there are any. Now, I can keep talking. I do like the sound of my own voice, but I'm more interested in making sure I'm meeting your needs and getting you where you want to go.
Hi, this is Danisha. I have two questions on the buy now, not later
Yes,
program.
yes, Denise.
um, so, how long do they have to stay in the home before they can sell it if they decide to sell?
There is no prepayment penalty, unlike
Okay.
a different uh, buy now rather than later. There was a 3-year hold. They had to stay, well, they had to keep the loan for 36 months. Otherwise, they had to share in their earned equity. So it wasn't that they couldn't sell before 3 years. It's just they had to share the money they had earned. So if they bought the house at 400,000, a year and a half down the road, it was worth 550, and they wanted to sell or refinance. They just had to share that difference between what they paid for it and what they owed now versus what it was worth with the servicer.
Okay. And then if what happens if they pass for the heirs? Are the heirs forced to sell the home, or does it carry over to the heirs? How does that work?
That's a very interesting question that no one has ever asked me before. So, short answer is I don't know. But I will get back to you with the truth because it's
I
not like
appreciate that honesty.
well, look, that's me. That way I don't have to think about what I said if I just tell the truth, you know? Um, it's not like the reverse mortgage, which does require the heirs to make a decision. They don't have to make a decision, they can let it go back. But the heirs in a reverse do get the first opportunity to purchase at allegedly below market. Okay. I say allegedly because That's kind of suspect, I've seen in certain instances, but be that as it may. Um, and we do offer obviously reverse mortgages as well. So I will, Denisha, if you will um, text, there's my phone number 240-687-4256. If you will send me a text, so I'll have your information, I can get back with you probably later today with that answer.
Okay, thank you.
You're welcome. What else? Okay, I do open house flyers to help boost your business. I will sponsor I almost said open house flyers. I will sponsor the open house to and give you co-branded information as well. And we can do broker opens where you invite realtors in, as well as open houses for the regular people that are hopefully going to buy the house. It's great if you can give me a week's notice so I can prepare everything, but 48 hours will work if it has to. I talk to people whether they're ready to buy now, it's going to be down the road. I talk to people about what they need to do to get their credit straightened. I am not a credit repair person, but yours truly has experienced life events herself. And there is life after bankruptcy, there is life after short sale, there is life after foreclosure. If they do what I tell them to do, I can get them where they want to be. But there can only be one surgeon in the operating room, and it's not them. Okay. What else? We have the app for the people to do their application online. Or if they are old school and they really don't like technology, I can take the application for them. Um, so, yeah, Jasmine.
Yes. Excellent, excellent. I'm loving the information, and I'm sure that more of us will want to hear more information on the program that you have, where people can purchase one day out of foreclosure, short sale, bankruptcy. That is going to be a tremendous value add to our team. Can
Okay,
you explain a little bit more about that? Then I'll have the floor open so that we can ask more questions.
sure. And I see Pat has her hand up.
Yes, I want to ask more about that same program. I have a number of Uber drivers looking to purchase, and so the program you've mentioned looks like it would be truly a godsend for them. Is there a minimum credit score requirement?
Yes,
Is that the
640.
640?
Mhm.
640. Okay. What else, say for Uber drivers, that might be information that you might need from them?
Well, if they haven't been driving for 2 years or more,
Okay.
we're going to need 6 months of bank statements showing deposits sufficient to support a mortgage.
Okay.
Okay. Now, reference the program itself. Let's understand this from the very beginning. Okay.
Mhm.
The interest rates are higher than the regular market.
Yeah.
Okay. There's no negotiation there,
Okay.
because they're getting a loan that circumvents the system. It's a
Right.
higher risk. Now, that being said, here are the mechanics of the program. We get the person fully approved before they go under contract. Okay. The contract has to have a clause in it that assigns the contract to the servicer. New homes construction, I have one builder that, and it's in their contract that they will assign it. They forgot it was in there, and I had to show it to them, because most new home communities push back on it because they feel like they're getting investors. They're not. They're getting homeowners, but somebody has to buy the property on their behalf so that they can now make the mortgage payments to the servicer. The servicer buys the property. That's why the contract has to be assigned to the servicer. There is a clause that has to be in the contract that it is going to be assigned to the servicer. Okay. Those two items set aside, three items. One, the rates are higher. Don't cry about the rates. Secondly, let me say something. Well, let me finish that sentence. Um, I'm trying to stay on point. The rates are higher. The contract has to be assigned. I get your buyer fully approved. There must be a home inspection. The servicer doesn't want dilapidated properties. So a home inspection is required. They get a copy of the home inspection. They have the right to pass on that property. But new homes, there's never an issue there. They just don't want a property that isn't habitable. Okay. So, that being said, other than that, it's a regular loan.
Hi.
Jasmine?
Oh, I'm sorry.
Oh, it's okay.
Go ahead, Gina.
So my question as far as the new homes, um, most of the time, in order to receive the benefits, the what am
Builder
I trying
credit?
to build a no. So they do things like maybe they'll complete the rec room. They'll throw in, say, up to 140,000 in your choices of whatever colors and things you want in the house. Those the incentives. That's what I'm trying to say.
Okay.
So most of the time, new builders will require you to use their lender in order to receive the incentives that they offer.
Uh-huh.
Even if it's closing help or whatever it may be. Okay. So with that being said, how would that work with the program that you just said and have getting assigning it to someone and that kind of stuff?
Okay. Well, first of all, remember, this is a specialty program that if the builder could, this is a specialty program that isn't for everybody. This program is going to be for a person that just had the gavel drop on their bankruptcy. Okay. And it has not been 2 years since the bankruptcy was discharged. They just got out of foreclosure. The house just went to foreclosure. So I'm saying that to say, if it's somebody other than that, they're going to get regular financing. They don't want this program.
No, what I'm asking is, say they did, say they just got out of whatever the situation, and they want to purchase, say, a new townhome. I'm just picking something.
Oh, okay, okay.
And I'm saying, so what I've come across each time over the years is that new home builders want you to go through their
Absolutely.
lenders for
Yep,
their incentives. So
yep.
I'm saying if this person 1 day out, 2 days or a month out, whatever, and they have a 640 as required and those things, how does that work that they can get the incentives without using the lender of the builder?
Because that builder's lender probably doesn't have this program. And if they're 1 day out of bankruptcy, that builder's lender is going to say, I can't help you. So the builder wants to sell the house. At that point, you're going to say, I have a lender that has either already approved this buyer or can approve this buyer and make this transaction happen. Do you follow me?
Okay, gotcha. I got you. That's a good segue. That's good. Yeah. Well, hopefully they'll still provide the incentives because of, I could talk to them. And I don't think that'd be a problem.
Right. The major builders and even the small builder, once again, it all starts with your buyer profile. When their lender sees that they just had a foreclosure or a short sale, or they're working part time, or they're an ITN borrower, or they have an EAD card, they're going to say, I can't help you. And that's where you're going to be able to provide a solution. You with me?
Okay, that's awesome. That's awesome.
Oh,
Thank you. I appreciate you.
you are welcome. I appreciate you and the opportunity. Jasmine?
That is an excellent opportunity. And I will add one thing there, Fredecia. I love that Gina wants to make sure that the buyers are still getting the builder's incentives as we should, right? One of
Absolutely.
the one of the mindsets though that I want us to have with our buyers is if they're 1 day out of foreclosure, 1 day out of bankruptcy, 1 day out of short sale, their incentive is getting the house. So
For
that is
real.
the incentive. Instead of them having to wait 2 years, 3 years, 4 years in order to re-enter the market, all of the equity that they could have built over that time, that is the incentive in and of itself. So
Absolutely.
whether that lender or the builder, I should say, says, okay, well, we'll give them the incentive or we won't give them the incentive, the fact that they will be homeowners again without having to wait and forego all of those benefits is incentive enough for me. So that's
Absolutely.
outstanding.
Yes.
Great, great question, Gina, because that's one that I'm sure that we would have all come across at some point. So thank you.
And
All right.
understand, guys, with this program, they're writing off the interest from day one. They're
Mhm.
writing off the property taxes from day one. They're writing off the cost of buying the house. It's a regular transaction once we get them there. And they're saving a ton, preventing the uncle that I disinherited, Uncle Sam, from getting my money because they have tax deductions that they don't have in staying if they remained a renter. So as Jasmine said, you don't mind if I occasionally call you Jazz, do you?
It is fine. So
Okay.
Fredetia and I have history. We go back.
Yeah. And jazz is one of my favorite music genres. Anyway, so
Mhm.
um, see, that's why I have to stay on point because I have so much to say. So as she said, getting the loan, that's the biggest incentive. But yes, and I will just tell you straight up, Stanley Martin is on board with this program and a couple of others, but I do a lot with Stanley Martin.
Is there a program name for this wonderful concept?
Yes, I just forgot what it was. No, I'm just playing. We call it on this one flyer, which I did not give to you guys, we call it rent to own, but it's 1 day out of bankruptcy, 1 day out of short sale.
Got it.
Um, and I will send you the official name of it, but basically that's what it is.
Aphrodisia, this is
Thank you very
Shay.
much.
Hey, Shay.
Hey, I was fascinated. I really love the idea when you was talking about not dropping the listing price of a home. I want to hear a little bit more about that program. And it also gave me the idea, and I kind of want to kick myself, and I'm going to talk to my broker because oftentimes we do open houses, but I think it'll be important for us to do a lender, reach out to our lenders because you guys know who's coming through the pipeline who might possibly qualify for some of those homes who that might not sell. And I think that's something that I neglected to do, was just to say, hey, reach out to my lender friends and say, we have this property. It's coming on the market. It's XYZ price. Do you have anybody who might fit the description? But could you tell me a little bit more about how that program works?
Right. Well, it's not really a program, it's a value added service,
Uh-huh.
which instead of dropping the price, if they're going to drop the price $20,000, don't do it if the buyer, let's say the house costs 500,000, and it doesn't matter if it's FHA or conventional. The house costs 500,000 times 3.5% FHA, that's 17,500, okay? Resulting loan is 482.5. So instead of dropping that price down to 450, leave it at that 500,000, have the seller pay 500,000 times 6% is 30,000. He can contribute up to 30,000. So of that 30,000, use some of that money for a buy down, which the difference in the buy down, for example, the difference in the 6.5 rate, the 5.5, and the 4.5, let's hypothetically call that $24,000 because that monthly payment times 12 for 2 years and then 1 year. So that money then pays for a buy down. And the difference, the remaining amount pays on the buyer's closing costs. The buyer must do his own 3.5%. He can get a gift for it. Seller can't pay it, but the seller keeps his price at 500, uses that reduction that he was going to do to benefit the buyer in his cash to close. Let's say he doesn't need a buy down. Have him pay that difference for closing costs for the buyer, which he can legitimately do. Make sense?
Definitely makes sense. Thank you so very much. I appreciate that. That's great. I love that kind of information. Thank you.
You are so welcome. Thank you. Because see,
Um,
we want to not only just bring our programs to the forefront, we want to be your partner in adding value to help you make additional um, commission and referrals. Yes,
um, you mentioned FHA and
yes,
conventional.
yes,
I'm a veteran, so I want to
yes,
know, does VA qualify for all those things as well? The VA loan.
absolutely.
Okay.
And another thing that's kind of quietly kept but is fully available, VA doesn't require a credit score. Now, we, the lender, the better your score, the better your pricing. But we have the ability to do a manual underwrite. And again, 100% transparent. If we have to do a manual underwrite, get ready to jump as high as we say, give as much blood as you have, including your firstborn. But because when it has to be a manual underwrite, they have to close every door, they have to dot every I, dot cross every T. What do I mean by that? Okay, recently had to do a manual underwrite. House cost $750,000. VA buyer, new build, new construction. Builder was paying all their closing. They had He had a divorce situation, was remarried. The new wife had challenges, but because they're hooked up, he's got to answer her issues and show that the ex wife that retained their former residence was making those payments. Okay. We were below a 580 credit score, but they're in their house today.
Ooh, but God.
Yeah, girl. Woo. And of course, lots of referrals followed that one. Um, but that's what we want. We want a referable experience. Okay. What
Excellent.
else?
Thank you so much for that. I wanted you to speak a little bit more. There were two things that you said. One was with respect to buyers who don't have documents, if by chance, what did you call it? So if they're not citizens, what did
Oh,
you
okay.
gave a specific acronym for it?
EAD?
Yes, there you go.
Yes.
And there was another acronym that you gave as well.
Oh, ITN,
There you go.
foreign nationals.
Okay. So
Yeah.
talk to us a little bit more about that.
Okay. Um, the Now these people can also get regular financing, not just that special program. Um, but the EAD buyer has to show me that they have a work permit that is valid.
Tell us what your EAD stands for and your
I
other
knew I
acronym as
knew
well.
you were going to ask me that. They know who they are. I promise I'll get back to you on that. I really shouldn't use the acronyms. Let me think. Let me think. EAD. I have no idea right now. But there is a group of people that, so I will email you that answer. And I do apologize for not knowing.
It's employee authorization. Oh gosh, what they call it? Employment authorization document.
Thank
It's
you.
like a green card, yeah.
Thank you for saving me. I owe you Starbucks for that.
Exactly what it is. I'm looking it up at the same time. Allows non-citizens to work legally in the United States of America. Excellent.
Mhm. And your ITN is your foreign national, and they don't necessarily have a social security number.
Perfect. And you can give them both FHA conventional and the standard products as well as the specialty products that you were talking about?
The one without the social, no, he or she has to go in that specialty product of the land installment. But the foreign national, as long as their country that they are a national of is friendly with the United States, they're not on that list, then yes, they can get regular financing, and their down payment is going to be about 20 to 25%.
Thank you so much for that.
You are so welcome.
Does anybody else have any other questions?
I have one other question.
Okay.
There are times that, and this is reference taxes for the people who are under the EAD. Say they work for their embassy or they're here working for whatever period of time and they want to purchase a home or what have you. How does that work as far as taxes? Because sometimes they're tax exempt.
Right. Now that's the foreign national.
Right.
Okay. So their country has to be acceptable, and I have to get back with you with the guidelines. I closed one last year, but honestly, I don't remember all of the guidelines, but I will send those to you. And again, if you will text me your information and send me the reminder to provide those guidelines. And I can also provide them to you, Jasmine, so you can share them with the entire office. And anytime you want to do a specific um, get together, either virtual or in person, we could, even if you want to do a specific meeting on the what we'll call the rent to own program, which is not a rental, it's a buy from the beginning for those specialty 1 day out bankruptcy, short sale, and foreclosure. Okay, now I see it in the chat, but would you kindly text it to me as well? Because I may not have access to the chat once this is over. So
Okay.
here's the winning lottery number: 240-687-4256. It's better than the lottery. 240-687-4256. Okay? That's Fredetia Money. Text it and I will get back with you. Okay.
Excellent. Excellent. Thank you so much, Fredetia. There was so much just good stuff in what Fredetia shared today. Some of those products are specialty and specific to Fidelity. Does anybody else have any more questions or need clarity on anything? Because obviously this gives us the ability to be able to pull more targeted tools for our buyers that may not be citizens or buyers that may be coming out of short sale or foreclosure. You know what I did want you to speak for a quick moment on, as you said, an FHA product that does not require a down payment.
Yes, that's the FHA 100. That
FHA
is.
100.
Um, Alicia, can you go back to that slide? Go back to the products. Keep going. Keep going. Keep going. Stop. This one. No, go back. Right there. Fidelity Zero. FD, we call it Fidelity Zero, FDM 100. Okay. I don't, can you see the entire slide, guys?
Yes,
Okay,
we
there
can.
you go. Okay, so it's a first and second trust. It doesn't require you to be a first time home buyer. 640 minimum credit score. The second loan is repaid over 10 years. There is a non repayable option, but that gives you a higher rate on that second. No income limits. You know how MMP and Pathway to Purchase and FHLB, they have income limits. This has no income limits. And what else would you like to know?
This is excellent. Does anybody else have any other questions about this?
And today's price with the 680 score is 6.875 with 0 points on the first.
Excellent. I see that the properties are outlined below: single family, two family, condo, or planned
Regular, yeah.
unit development.
Hmm. Again, people's challenges, in addition to credit, is cash to close. We've tried to circumvent that as much as possible.
This is outstanding. I'm
Awesome.
excited to hear about it.
Thank you.
Is the interest rate on the second loan the same as the first?
No, let me give you an idea of what that is. Just one second. Only because I had it right now available and I wanted to just I can tell you what that is. Again, you have the option of repaying it or not repaying it. And with no repayment, you're going to get a higher rate. We also partner with Virginia Housing to do their programs as well. That's about 8.5 on that second.
Got
Okay,
it.
thank
And
you.
excellent question, Donisha. Now, how does this compare to the MMP's product that gives the buyer the down payment assistance for that silent second?
Well, the advantage is there are no income limits and it doesn't matter how many people are in the family and who's going to live in the house. So, rate wise, MMP, they're going to be better, but will they qualify if the other person's not? You've got a family, you've got people over the age of 18 that's going to live in the house. All of that income has to be declared with MMP. It does not have to be declared with FDM 100.
That's
So it's
an
a trade-off.
excellent
It's
differentiation.
you have to use the tool that works for your customer. If they're making $250,000 first time home buyer and it's just a family of one or a family of two, MMP isn't going to touch it. We will.
Outstanding. Thank you for helping us to differentiate.
Absolutely. That's what we're in business to do business.
All right. So we are coming to the end of our Realty Talks for today. Guys, help me to give a round of applause to Ferdisha. This has been some phenomenal insights, some very impactful information. And as was intended, this gives us more tools to help our buyers. So no matter what the buyer's current circumstances are, we have a lender and a program and an opportunity for them to be able to purchase their home and purchase their home now. So we thank you for your time. We thank you for your expertise. We thank you for everything that you've brought to the table. Thank you, Alicia, for joining Ferdisha as well and helping us with those slides there. The information contained is going to be on our YouTube channel, Realty Pros. So you can go straight to Porterhouse International Realty Pros and you will see this, because often this information we need to hear multiple times, because some of these things are reminders, some of these things are new concepts. And you'll say, well, what was that program or what were those guidelines? Go back and watch it, take notes. If you're like me, use the AI, let the AI take notes for you so that you will know to whom you should go when your buyer has a specific need. So again, thanks again, Ferdisha. We're looking forward to having a lot of success this year. To all of our Realty Pros, if you need anything, absolutely give me a call. Remember that tonight is our Realty Pro Roundtable, guys.
Mm.
So I'm going to go ahead and release you, Ferdisha and Alicia. We thank you so much. Realty Pros, hang in there for another 30 seconds. I just want
Okay.
to give you guys some instructions. Thank you so
Thank
much
you
for
so
joining
much.
us.
Have a
Have a great rest of
successful
your
year,
day.
guys.
You too.
Bye bye.
Perfect. Realty Pro. So if you guys joined us last month for our Realty Pro Roundtable, then you know the energy in that room was infectious. and just all of the innovation and the things that we're going to be doing this year with Porterhouse, you want to be included in that conversation. So if you said, I would love for us to do this, or how can we do that, or I want to plan this, or these are some things that I'm learning that will absolutely be helpful to us at Porterhouse and to further me and my business, or whatever that looks like, this is where you get to contribute to the team, right? There's so many things that Mr. and Mrs. Porter are always working on and always playing behind the scenes for you guys. But Porterhouse is a family and Porterhouse is a team. That means that each and every last Realty Pro, you are a significant part of this. We need to hear from you. We want your contribution. We value your experiences. We want your ideas so that it helps to benefit us all. All right. So that is this evening, 7 p.m. in our Upper Marlboro office. If for some reason you say, I need to be there, I want to be part of that, but if something happens, reach out and let me know what's going on. Send me a text message or give me a call so that we can account for you. And if you want to be included, we can make sure that we make a way to make that happen. Okay. But I'm looking forward to continuing that conversation this evening because listen, this year is just getting started and there are so many tremendous things on the horizon. So that's all I wanted to say. I look forward to seeing you guys. If you need anything, absolutely give me a call. Thanks so much, Realty Pros, and hats off to you guys for joining today to make sure that you could get this information to be a better service to your client. All right. Yesterday, one last thing I'm going to share with you guys. We released a commercial for Porterhouse. So we have a television commercial, we have a social media commercial. So if you guys are on, what is it on Prime, Mr. Porter? You can tell us what platform is on TV, but we are doing what is necessary to level up Porterhouse for you. Everything that we do is about our Realty Pros. Every hashtag is Porterhouse Realty Pros. Every piece of marketing is Porterhouse Realty Pros. We want to bring more opportunity, more business, more scalability for you and your real estate business. So we need you to lock in and be part of what we're doing because everything that we're doing, it is for you. All right. So we are excited for everything that's going on. If you guys have any questions, let me know. If you want to be involved, you say, hey, I would like to see us do this. We are establishing various committees that will be planning those things. So be part of what's happening here. And thanks again. I'm going to let you guys go on that note. All right, Realty Pros, have a phenomenal rest of the day, and I will see you guys this evening.